auction. Hooray, hooray, hooray. Now, with what we have here, we are going to be looking for how do we use the third iteration. Even though I showed you guys how to use Fibonacci in the last video, if you didn't watch it, do not come straight to this video because you might not understand it. Just watch the Fibonacci video and you'll be able to tell. The only difference about this one is it's a little bit more precise. A lot more precise, because technically, if you were to use that Fibonacci chart, right, you would have probably wanted to put it here, the bottom of that wick, all the way up to the top of this one, or have the Fibonacci going from this one all the way down here. And me personally, I didn't like that, nor was it precise enough to the point where I was looking for it to go. Right, and then it would be just more cut up, cut up, cut up, cut up, cut up, and cut up. And then considering how we have manipulators in the market, what's the point? So let's go to the 5 minute and delve into this. Now, what we're looking at here is where can we make a trade at? Now, we're going to go back test a little bit to show you guys what you're supposed to be doing. Okay, let's just start from here, October 27th. Let's zoom in on this day, starting from here. Okay, now let's go and remember, we trade between 3 o'clock in the morning. We really can trade between 6 to 9:35, but just to be on the safer side, I like about 3 o'clock to 9:35. Okay, so looking at it here, coming into our nice days, and considering where we are here, okay, that's 9 o'clock. Okay, so this is our basically our 6 o'clock. Now, I'll throw in a Fibonacci just to see what we're looking at here, right? Me personally, I like doing it the inverted way. I'm not going to lie to you guys. Looking at it here, so this is about 9 o'clock in the morning. Looking at it there, kind of consolidated here and had a failed auction here on this ideal point of interest, right? And let's just wick it up and see how far up it is. 24 ticks. Not really that bad for consolidation, right? As you can see, the failed auction was coming in, wick, kind of closed up, strong rejection to the downside, tried to wick up again strongly, made equal highs with that, and failed to go down, open here, closed. Most people would have probably entered in on the retracement here and went down, right? Now, like say if we did the same thing, we just did it on our line, right? You had 22 tick stop loss, so about $220 on 2 contracts, and then half of that on 1 contract, right? And then you would have been rewarded with, if you just took it to the equilibrium, right, just about 80 ticks if you wanted to. Not really a bad trade. If you stayed in all the whole way, maybe 100, but you would have never known it would have went down that far, right? So looking at it like that, I'm like, this could be a viable trade. This could really be a viable trade, right? Now, that's if you woke up at 4 o'clock in the morning. Say if you woke up at around 6 o'clock, you wanted the next viable trade. Now, the amazing thing about this is you can use this as guidance, but realize that it's kind of flat. It's not really helping us for real, right? So let's just get a little bit more precise into this and throw another Fibonacci into this, right? We swept the ideal and rejected off of the optimal, right? See how many ticks of drawdown this is. Oh, 5 ticks. Maybe if you had your stop loss up here, that would have been about 20 ticks of stop loss, man. Like, that's a pretty good trade, right? You got in here at what, 610. Started coming back up here. You think it was going to come into the zone and sweep it, right? And I'm like, shoot, you'd have been pretty good, pretty well off, right? Considering everything else and all how these wicks tried to come back up, right? And then when you consider this is the last line of defense, when you think about it, if you were to flip it the other way, right? Actually, just move this around, depending on how you read the document, right? Could have done it this way. The last line of defense would have been this level, or if you invert it, depending on which way you like to use this, you can do it like that, right? And as you can see, it rejected off of that and closed below off of the 618 for this strong rejection. Me personally like doing it the other way. So just looking at it like that, we had a pretty nice rejection, and then it came and swept to the downside. You could have got in right here, right? Or if you were lucky enough, let me see, should have been on this line, even though it's not precise to the point, right? Maybe a tick off, 2 ticks, I don't know. This should probably be about a tick off. 2 ticks, okay. 2 ticks off of that. Now you could have probably put in a market order and saw it coming back down, or if you could have put another market order right here and realized it's the 5 minute, right? But say if you did come up here, right? If you just put it in at the optimal, if you put it in at the optimal, 26 ticks, just depending on how much you're willing to risk, and then considering how the candles are moving from the previous movements, right? So looking at it like that, could have did that, wrote it down, 100 ticks, 120 ticks is more or less what you'd be looking for. However, you catch the wave, you can get rewarded handsomely, right? And this is how you would be able to tell. Look at the levels. Comes up here, sweeps this level, right? Then it comes up into this level. We wanted to check this level and see how it's doing, right? What is it doing? Last line of defense is this candle, right? After we see it reject off of this, completely out of that zone, candles are moving down lower, touching this zone, right? Coming into it like that, we kind of clearly see it's coming into the optimal, or the ideal, and this is optimal, but considering how market is still just trying to test the upper ranges, we would be looking up here at these 2 lines, right? And as you can clearly see, there's some strong rejections off of those at that. And we can clearly see the movement still going to the downside, right? And then say if we wanted to come into this zone and wanted to rebuy trend, we see coming into this zone, right? And then we can kind of see 5 minute RSIs coming into the oversold territory, right? So we have a nice time for an imminent change. Kind of at equilibrium. Not too shabby. And along with this, I might have bought here at this equilibrium. Probably I would have bought at the 6.18. And then again, probably this would have added contracts. When you think about it, that's not really a lot of ticks of drawdown when you are more precise about it. Considering the old strategy used to require just about this amount of drawdown. When you consider that, that's almost the whole range. And now you're getting smaller than that and being and able to get more rewarded for it. And then this was market open. If you know what this was, this would have been a nice head and shoulders, a nice little auction here, right? Going to the downside if you were to keep riding it. You kept on it here, you would have been pretty fine. So you go to the next day. Yeah, we can go to the next day. That would have been day 1. So let's keep going. 3 to 5 in the morning. Okay, this would have been the next day, right? Kind of choppy here, right? You just get the Fibonacci to see where we're looking at, or like what's our zone. We're at the 6.18. Pretty nice. We get the nice auction here, don't we? See the nice auction here. Getting the nice rejections, right? At about 3 in the morning. Say if you get up around here, right? You see it's in the kind of rejected off of the nice ideal zone. Optimals right here. So let's just take a look. Actually, I could redo this the other way if I wanted to. Because I kind of like this. Kind of like it because just how it is, but both ways subside just depending on which way you're looking for trend to move, right? So we hit this 6.18, right? We're at the ideal. Or yeah, would have been the ideal, right? If we're looking for sells, so just vice versa, right? And then we come back up into here, and we're looking at it. Where is it coming into, right? So when we come and see it here, oh, optimal, ideal. Even though this would have been our last line of defense, optimal still worked quite nicely, considering how much drawdown we would sustain. Utterly nothing, right? And now say if we did have our order here, say if we put it, our stop loss up here, 41 ticks, kind of big, but it's not really that bad. And then we would have probably had something like that, right? And then plus RSI was oversold here prior to this, and we have our 6.18 oversold, and we can clearly see RSI and money flow are coming down to the downside. That'd have been a pretty good trade to have taken for that amount of time. Or if you come back for the retracement at 450, as you can see there, or if you wanted to see where it would reject, you could just throw another Fibonacci down, right? Because it's just like, you can always come down into this. Put another one down to get a little bit more precise. Not too shabby, even though it didn't hit the 6.18 and it wasn't really too oversold. Could kind of see that it hit the rejection point where it really needed to hit a rejection point. Optimal, ideal when you just think about it. Considering that would have been a viable trade for that, we wouldn't be worrying about this market open stuff just because of how these candles are, just to avoid it. Because he came from this zone all the way into this equilibrium zone. But let's say if we did trade up into this, right? We hit the ideal zone, people. Every single time, then it rejected off of the optimal. Like, what more do you want? What more would you want off of that? And then you can, considering you see this nice rejection candle with a nice body on it, wick back down to retest it. What more would you need? Like, utterly, what more would you need? And you have this nice wick to the downside testing at 6.18, very nice rejection there too, and still continue the trend back up to the upside. Just depending on how you want to do it, you can go straight to the next day. If you did take that, you would have been rewarded handsomely for that. But if you're newbies, you don't really want to trade that time frame. I personally don't like trading those time frames. Now let's look at this day. This would have been our range, our time range here. So this nice little area. Now let's get our zone out. Right? So we're basically in this nice zone here. Or rather, I could flip this around the other way, just depending on who likes to do it either way. I'll just flip between it. Now we get the 786 and then 6.18. We can clearly see it's coming up there in that oversold area, kind of chopping around. I don't really like it, but let's see what we can get out of it, considering where it's rejecting it. Right? So if we look at it here, we really pushed past that 6.18. There was some healthy rejections off of that. Then it went to the 3.82 optimal for a rejection, right? But ideal would have been quite nice as well. However, you got to realize markets are slower. If RSI is somewhat up there, like, it's going to start moving, especially with that. And then considering how much drawdown is here, it's not really that much considering how much you can make off of those rejections, right? And then if you consider it here, did I get that correct? No, it's not fully down. You keep that, right? You see this look here, see coming out the zones. Quite nice. I hit the optimal and rejected. We don't really care about anything other than where is it coming out of and can we make money out of it, especially how it came out at this 725, right? And then kind of looking at it, this was about 940 and then the whole huge dump happened, right? It was really close to hitting that 6.18 here too. So if we did look at it like this, right, you see that. Okay, zoom in even more. Quite a nice equilibrium. It had a nice rejection off of this 0.618. The more precise we can go in zone into zone just to see where we're looking at, right? And then probably this was oversold on the 15-minute regardless of the fact, but that's not what we're really paying attention to. As long as you can find daily bias and all that other stuff, experience helps with it to gauge which way market is actually moving. Is it moving to the upside or to the downside? Now this would have been that day. You wanted to come all the way here until 10 o'clock and be like, oh, maybe I didn't make a trade. I really want to make one. Just look at the zone. You see coming into the oversold territory, right? We're like, okay, it swept at 3.82. Got the nice candle body up, right? Say you're coming down here and you see it. You're like, oh, it's okay. It's oversold. I don't know. Look in this zone. If you see it in here, just look at the following zone to see where market is moving. So with that, you're like, I want to get a little bit more precise on that since these wicks can be really dangerous, right? Have a contract here, have a contract here, then have a contract here, and have that as your stop loss, right? So basically, if you had a contract here, you would have risked about 7 ticks. if it came down here and then that would hold 20 ticks of drawdown. When you think about it, considering how many other people have larger drawdowns or stop losses than you, it's just like, it's pretty good. Because you can use RSI money flow just to see if the reaction is incoming. And it came back up here after that. So we can look at it like this, right? Came into this 786 zone. We're like, okay, let's see what it hit in here. Probably likely hit the equilibrium zone. Oh no, it actually hit the 0.618 and rejected off. As long as your zones are perfect, and you see the following zone, like you see it coming up in there, and after this RSI oversold, like, just look into the next following zone. You don't really see these bodies closing up here, right? But you see the wicks coming. Likely to hit the 786, could have got in there, and then when you look at the difference in the wicks, right? 10 ticks, like, it's not that bad. Considering how we had a dump like that, and then it was still continuing the dump. Now, let's say if we wanted to continue into the next day, right? 3 o'clock in the morning, we're back into our zone. 3 o'clock, 4 o'clock, any of the between this zone here. We'd be looking at that. Now let's go here. Drag it. Okay, we're at the 3.82, optimal. Or then in the other case, if you looked at it the other way, depending on which way you read the paper, that would have been exactly where you should have bought your thing, or bought a contract at, right? Kind of perfect, considering how RSI was coming into the oversold territory, still oversold. And then when you think about it, you'd say if you did buy it here, you've been risking about 60 ticks here, since how, considering how big the zone is, right? Now, if you wanted, if you confident, you probably would have bought here, or you would have bought right back there after you saw this rejection. So this would have been about 6 o'clock, right? So if you're a bit more confident in it after seeing that rejection, hey, that'd be another buy signal for you right there. If you bought right there, you could add it in another contract right there, unless you didn't sell up here, which would have been a daily quarter right there. That'd have been $1,800 on 2 contracts, $900, or what? Yeah, $900 on 1 contract. Like, what more would you need? Unless you wanted more. And you could have rode this one up just looking at it here. Because it didn't come back down, pushed up, found support, and then found support on this level, then found support on that level, rejected off of this level, then found support on it. Like, if you see this trend is strong enough, just ride trend. Your trend is your best friend. Now, say if you came back here at 820, it's just like, which way do you want to move? And considering that, let's see, we're at the 786. We were consolidating in this nice little zone here, right? But let's look at the zone above. Like, where are we looking at? Where is price rejecting at? Equilibrium, close to the 6.18. Very interesting to me, though. Maybe if I was feeling a bit frisky, maybe I would have took this to the downside, because this is a head and shoulders, more or less. Shoulder here, and then dump. Right? As if I was feeling a little bit more frisky, because realize we're at the bottom of this zone, and it has failed to reject, or rather find support here and then there. So I don't know. Now let's go to the next day. This would have been our zone here, more or less, if we were awake, more or less of a choppy zone, kind of, if you ask me. This is what we would have been looking at. This is a nice failed auction here. This is a nice, probably this was a PPI or something like that, I don't know. PPI or CPI, some type of news, but, or, no, I don't even know. Or, what is that? Job reports or something, or unemployment rather, that's probably what that was. Now, let's get this out. Let's see what we're looking at here. Let's see what the fib is telling us, right? So we're coming up into this territory. You can kind of see that it's oversold at this territory here, right? We see it coming in here, what, at 250? We see it oversold more or less on MFI. Like, okay, it's coming into the, and we definitely know it's going to come into the zone at open, right? So let's just take a look at where we're looking at, right? So you can also always care about where the closures happen on the candle, right? So looking at where the closures happen, more or less closed right above it. And considering that, right? How much drawdown would you have went into? 20 ticks, 15. Came up here, 30 ticks. That's only 7 points. You're not really facing that much heat, considering how much you could make, considering how it was almost oversold at that, right? You always want to see the reactions of the candles. You would have been rewarded something with that. Just consider, just ride the wave, right? And then you can consider that it came back down here at market open, tested London's low. Oh wow, oh wow. Now, ain't that nice and perfect, right? Ain't that nice and perfect? The last line of defense rejected price right back up the other way. Well, let's go to the next day. Okay, so this is our nice 4:20 a.m. So this was probably close to midnight. Yeah, 1:45 in the morning, right? Say if you were awake here, you could have probably taken this if you wanted to. Fibonacci would have helped you quite nicely here, right? In all honesty, that's kind of nice. We wanted to be a little bit more precise to see exactly where it rejected. Again, the last line of defense. How 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 much more precise do you want to get than this? You're not risking anything. You like say if you wanted to risk this whole zone, right? Feeling a bit frisky. That's 22 ticks. Only 22 ticks. Our size almost oversold. Almost everything is oversold here, right? And then say if you did ride this to the downside, rewarded handsomely because you knew where it was. It was rejecting off of the levels prior to that and everything. And this was a beautiful failed auction here, as if you got up there. Now, let's just say you got here closer to this. You see that RSI is oversold, right? You put your Fibonacci down at this zone. You're looking and looking and looking. You want to see where's the next point of interest. What we're looking at here. Oh, wow. Sitting here, we could put a nice order here and then another order here just to layer it in, and then have our stop loss at the bottom of that, just in case it gets a little bit too frisky. That'd be about $400 on 2 contracts if you were in here just sitting here riding this little wave here, right? When 15 ticks, what is that? $60 on 1 contract, 150 on, no, that's not like $75 on 1 contract, 2, 150. That's not really that bad, right? You could layer 1 and 1 if you really wanted to, right? And if you got in here, right, you probably would have been out 120 ticks. Pretty good thing. That's $600 on 1 contract, $1,200 on 1, or $1,200 on 2. Or if you wrote it back down again and you see reject again, right? Look at that nice RSI and look where it's at. Not really dipping any further than that. You could have wrote it up here if you wanted to. And this would have been about 5:20 in the morning. And if you wanted another trade, you could basically just go back to back to back to back to back, right? So if we come here, we see our last line of defense. We want to see where it hit up in this zone. Hit the equilibrium, right? So when you think about it, you can risk a little bit here. Because look how much ticks that's on. You don't have no reason to hesitate if you're getting more and more precise there. You know what zone it's coming into? Starting to get oversold. It probably was oversold at one time on this when this candle was up here, but you see the weakness coming there and it rejects off the 6.8. Just depending on what you're looking at. Now, let's go to the next day. Okay, I'm about to say, this would have been a crazy day if you wrote this thing down. Goodness. That would have been a goodness gracious day. You could have, if you stayed in this all the way down here, like, you would have been rewarded handsomely for that one. But then again, you would have met your quota a long time ago. Now let's go to the next day. Okay, this is our 340. Are we getting any RSI oversolds here? We got a nice little consolidation, again, consolidation, and a breakout to the upside. Well, this reminds me of a triple top, if you ask me, right? So, with how we are right here, I would probably do Fibonacci on both sides. So, that would be Fibonacci here, rejected off of that. It could have been nice if it rejected off of here, more or less. If you ask me, because it'd be nicer if you flipped it this way. And you got this one. Flipped it here. Rejected off of the 6.18. Or if you flipped it the other way. Actually, no, not this way. Flipped it that way. Either way, it looks pretty good. Looks pretty good when you think about it. And what's nice about it is you're getting what you're looking for. Now you can make it even more precise. How much more precise you want to get this? Worst price rejecting off at. As you can see here, candles cannot close below the last point of defense, right? And rejects down. Say if you got in right here, right? 10 ticks, like you're gonna complain about $100 on 2 contracts. What, 19, bro? Like $200, one contract. That's what, $100. You complain about it, and then you get rewarded like that, and you can clearly see RSIs coming up there into that oversold territory. That smells like money to me. If you're scared about that, don't trade at all. And then even if you saw it coming into this zone, right? You see coming into this zone, it's almost oversold. It's just like, and you see the weakness coming in. You don't see that sell power anymore, or you see this nice liquidity sweep, right? Come into this zone. Draw that line, right? Say we want to get even more precise to see where it rejected off at, right? Come back in here. It's pretty good, equilibrium. I'm like, I wouldn't be tripping. Put that thing at that equilibrium. You ain't risking anything. 4 ticks, bro. Like, come on. Come on. How much more precise do you want to get? How much more precise do you want to get? And you'll be risking 16 ticks in that zone. And then if you come in here, right, you see it coming down really strong. You see it coming down, like heavy hitting. Or when market opens, right, you just come in there really late for whatever reason. I don't know why you'd be getting in there that late. But we see coming into that zone, right, where are we at? We're almost oversold. And more or less, me personally, I probably would have been looking out into this area, but if I see that weakness coming down there on the 1 minute, I know the 1 minute was definitely oversold for a hot minute, right? What are we looking at right here? Hit the last point of defense and rejected off. Rejected right off of it there, right? Or if we looked at this the double zone, I probably wouldn't be looking at no double zone, but I'd probably have moved one up into this next zone, right? See where it hit equilibrium, not too shabby. Just looking at it, what happened there, it's just like, wow, nasty. They're nasty. Now let's go into the next day. Let's go into the next London session. This would be what we would be looking at here, right? Coming in here, right? Come in here, we're like, I don't know. This looks like equilibrium rejection off of this to me, right? So let's just take a look at it. RSI is kind of flat here. Trade probably would happen then, but looking at what's happening here, right? We're just getting settled and more and more rejections here, right? So let's say we looked at this area, or area of interest, right? Let's stretch it out. Equilibrium, just as I thought. Rejecting, if I maybe would have entered in here when I saw that rejection and rejecting off like that for a quick scalp off of that 5-minute candle for about 100 ticks. I would have been rewarded handsomely for that. Now we see it coming, and I would want to see the retracement. We see it closing above the 786. This would more or less be our last point of defense. It's just like, oh, that kind of would have hurt my feelings a little bit, right? But I would want to see where is it closing. We see coming into the zone. I'd be eyeballing the zone most definitely, right? Most definitely be eyeballing that. Now let's go zooming into it and see where it's rejecting off at, right? Almost. Because you could technically just reject off at these zones, more or less. If you wanted to get even more precise, I don't really know why you would want to get even more precise than that. Let's see if it hit the last point of defense. Hit the optimal rejection zone, not too shabby. It's just like, you're just risking less and less ticks. But then again, trend is your best friend. If you see trend still moving to the downside, especially here, right? If you see this is like 6 o'clock in the morning, you see it happen, you see all this stuff happening. Price can't move up to the upside. Let's do the Fibonacci down and see what point it's rejecting off at, right? Rejected strongly off of the last point of defense, optimal. Rejected off quite nicely. It couldn't really push any higher than that after that rejection. Now looking at that, say if we did put it at the optimal, what are you crying about 10 ticks? You shouldn't even be crying about that. Like, look at that. 5 points. Bro, like, what would you be crying on about? And then if you're following trend, you see trend is still going to the downside, just ride that sucker down. Rewarded hand, 100 points, bro, 400 ticks. Let's go to the next day. This would be our zone again. Okay, let's take a look, see what we're looking at. Quite interesting. So this would be the zone that we'd be looking at. See what it happened here. Let's see if it hit the last point of defense. Quite frankly, almost. Then again, which ticks are you risking? 20 ticks, bro. And you're almost in that oversold territory right here, especially in London when there's low liquidity. Likely that's going to reject. If you were wrong, right, you could have just re-entered it back in and you would have maybe risked $400 on 2 contracts, 200 on 1 contract, and then you could add in contracts off of these rejection levels when you see it happen. What more would you be caring about at that point? Got that 24 tick safe. You did take that, right? Off that nice little RSI sweep at 240. If you were awake then, 200 ticks, you'd have been rewarded handsomely for it. Now you have this one, right? If you were one of the people that got up closer to 6, right? There's always morning trades. Hit that optimal. Did we hit the last line of defense in this zone? If you want to get more particular, we hit the equilibrium. Still a pretty good trade when you realize that the whole zone is only 10 ticks big. What are you going to complain about? $100 on 2 contracts, $50 on 1? If you were scared, you're like, okay, I just want to put this here and see what happens here. You're just to ride the continuation because this was the pullback off of that, right? Nice little flag here, which is kind of nice, which is hilarious to me. And then you see just consistently rejecting higher and higher. Just add contracts in there. You'd probably make a lot of money. And you could have rode this all the way until 8 o'clock if you really wanted to. Even if you were in here down here, you would have been pretty fine. Because you could have your stop loss if you were there, if you were there after here, just watching it go through. Nice head and shoulders feel kind of failed a little bit because we had the inducement. This should have broke past that low. However, it didn't. But see again, experience would have been a lot better if you were watching that candle form. Let's go to the next day. We're in this here. See, kind of consolidating in this zone here. Just want to see what's happening. Let's see what's going on here in this zone. Okay, we see it toward midnight. This is midnight's high, right? I'll just probably keep an eye on that. Right? And our last line of defense was right there. Let's see if it hit the last line of defense within this zone before it broke out to the upside. Likely hit it though too. More or less induced on it, which is beautiful as well. Now we almost hit the last line, about 1 tick off. Problem that, yeah. Just about that, right? We're just looking at it. Okay, just kind of feeling here. We had this nice liquidity grab that's probably scared everybody. And looking at it there, this would have been a very interesting day, especially if we saw this consolidation here. Now keep going on about that there. Kind of looked like there was very strong sell side liquidity here, especially. Now you could have probably gotten in here and had your stop loss up here about $300 on 2 contracts, 150 on 1. You wouldn't have really cared, because when you do make one, you're not really, or make a trade, you're not really risking a lot of money to make a lot of money. Now you can make a lot better trades, and you could have rode that down. And as you can see here, right, it rode that thing all the way down until it hit this level. As it broke through, what, 1, 2, and this is the 3rd level. And this is the optimal level too, and then this is the ideal. This would have been the 6.18 if this was flipped. So it's just like, could have took that down and been rewarded and took it right back up the other way. And this is the gap up. Now let's look at the next day. 3:30 in the morning. Let's see what we got here. Oh wow, the last line of defense, perfect rejection. MFI oversold. What more do you need? What more clarification do you need there? Right, we're coming back down into this zone. Let's see if we hit the last area of defense. Let's see if we hit the optimum. More or less, we'd be looking for the optimum. Oh no, we hit the last line of defense and rejected up. Oh, how nice is that? Close to it. And I'm like, shoot. Like, what more would you need? And then it hit the. Oh, this was the one that made the all-time high. So if you did have that, like, shoot, you would have been straight off of that perfectly. But then again, probably you would have been riding some trend like this and just followed this trend going up to the upside. I think this was the election here, which was insane to me when I saw this. Now, since we're coming back into some normal territory here, let's go to the next day. We're here to about 3 o'clock. See this nice consolidation. Let's go see what we get here. Come back up in here. Interesting zone. Probably would have took a trade here off of the inducement. Not really anything. Nothing too special here today. We got the 6.18. If you did take this, you could have took that down if you wanted to. MFI was almost oversold, and you see the flat top. You could have just wrote this one down if you were confident in it. Like, you can just scalp these candles, because you got to remember these candles aren't small. Candles aren't small. You could make daily quotas just off of scalping candles. You just got to remember that. Even if you came up here, you're like, it came into that equilibrium. He's like, I don't know if I should sell on this. Let's just get even more precise if you wanted to get more precise, right? Hit the last line of defense within that zone and reject it off. Since the zones are near perfect, you can just base it off of that, which is very beautiful. We can go to the next day, the next beautiful day. Rather, did I do, like, if you were late, even if you were late, you coming down here, you see RSI close to being oversold here, right? Put the Fibonacci down. Oh, quite beautiful. Oh my God, how many ticks? Oh, this looks like a lot of ticks. How many ticks is this? 40 ticks. Oh, it looks kind of scary, right? Hold on. What did I delete? Okay. So I'm like, okay. I don't want to risk that much. So actually, let me do it the other way. Too many ticks from that's too many ticks from. Let's take a look at it and see where we're at. Oh, we're almost there at the 6.18. Oh my God, how much more precise do we want to get? And how many ticks are we off here? How many ticks per zone would this be? Oh, 8 ticks. Oh, 12. Oh my God. Oh my God. Even if you put it in here and went to the next zone below, like if you would just, like, I don't want to do that. That's too much ticks. I don't want to risk $400 on one trade. If it came down here, risk only that. Basically half of that. If you see it coming down there like that, shoot. You always know them candles love to hurt you. You just gotta let it ride. You gotta have trust in the charts. But say if you did get it in here about right there, got a nice instant validation, 70 points or 70 ticks, not too shabby. Now if you saw it coming back down here and closing above, now that'd be a different story. Or if I was still in here and just watching it, now that'd be the thing. How much more would I want to watch this going to the upside? If I saw this as only 10 points, just let it ride. Just have some faith in it, right? Don't move your stop loss until you see this candle. If I saw that candle, right? I saw this candle come up and I saw this one, I'd have moved my stop loss just about right here at the bottom, or actually at the bottom of this wick. So I'd be guaranteed about 80 ticks of profit. Or I'd maybe have added a contract here and just still wrote it up the other way. But when you realize if you did place a contract here, rather, let me see, if you did place a contract here, your new point of interest would be right here. That'd be the new point where you would have to, where your order would be at when you added in the contract, or depending on how many you went in on. You could just rode it and rode the trend, depending on which one you wanted to take, the London or this one. You could do it for New York, but me personally, I don't like New York. I hate New York. I hate New York Open. Even though it hit the last line of defense, rejected, beautiful. Like, what more do you want? Swept London's high. You already knew where it was. What more do you need? You could do London if you did take that down off of that nice rejection. Like, shoot, the next candle would have netted you 200 and something ticks on a 5-minute candle. But that's what volatility does to you. Especially this. Now, this is what you call volatility here. 60 ticks. Whew. Let's see how precise it is if I were to say, I want to catch this downtrend. I want to catch that dump, and I want to catch the buy on that thing. Let's see what happens. Does it hit the last line of defense? Please, please, please. Does it hit the last line of defense? Come on, 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 come on. Just about perfectly. What more do you want? What more? How much more precise do you want to be? And considering how it's oversold, right? 1 o'clock, you come in here and you see this thing just dumping, dumped straight through this thing. What? How big was this candle? 225 ticks, and you just bought it back up to the upside. What more would you want? Literally, what more would you want? Even if you took it up here, you would have beat all this consolidation if you saw this happen. Reject off of this, reject off the 6.18. Then it's coming back down into the zone, rejecting off of that zone, just inducing right back down to the downside. Experience helps a lot. Now, let's go to the next day. Oh, this is the next day. Got our nice little double top here. Put the candle down. Like, okay. Beautiful. How much more are we looking at? We're at the last line of defense, more or less. Like, where are we sitting at? Oh, wow. Just about the last line of defense with RSI oversold. Could have took it down if you wanted to. Even if you saw this, could have just added in contracts, because when you think about it, these zones aren't too big. Say if we look at this one, how, like, London is a lot slower. You just got to realize that London is a lot slower. You still would have got rewarded handsomely. You see it coming back up there, you probably would have took profit here. You saw that rejection off of this, you just took it off of that. Or if you were like one of those confident guys, could have just rode it, and rode it, right? And I'll tell you guys something. There's a when market makes all-time highs, we cannot trade for 2 days when it does that, which is shocking unless it comes back into the zone that we're more familiar with. And there is a way that we can actually see where market highs or the next high is going to go and where the next possible rejection is. But that'd be something different though. This is a nice little thing here. Especially you wrote that down and you just that'd been a nice little thing there too. Hit that optimal rejection point too. That'd be the 6.18 rejection point too, along with an RSI oversold. You would know exactly where it would reject when it gets into the new zone. Beautiful. And this happened later on. Rejected off of the next one, the uppermost zone off of that. What more would you want? Okay, is this the next day? You came into this day. RSI is almost oversold. Okay, great, great, great. Let's see what we're looking at here. Okay, not too shabby. We're almost at 3.82. That would have been 6.18, which is the point of rejection, what you're looking for. So what more would you be wanting to see? So that's all you would have to be basically worrying about. Then you have the RSI oversold at 4 o'clock in the morning. Let's go back here and see what we're looking at here. Oh my God, the 6.18. Once again, if you were to flip this the other way, what more would you want? And then considering if you were up here, right, you see that you had your stop loss here, that would have been 20 ticks, but you could have kept your thing at break even just to see where it was going. Or if you wrote it all the way down, you probably would have taken out here if you wanted to. What more would you need? And then this was what market open, came back up here to 786. Like, it's rejecting, and then you could have wrote it all the way back down. RSI was basically oversold here. This would have been more or less another interesting zone, right? See, finding weakness. Catch it, finding weakness. Oh, caught weakness on the last line of defense. Oh, beautiful. Oh my God. Oh my God. Oh my God. And then the lines are already lined up. What's the next day? This one. We see it coming in here, come here. See what we're looking at. Was this the last line of defense in this zone? Just about. Close, but it hit the optimal, but I wouldn't really care too much about it since it was oversold, and I see the nice candle coming off of that. So I'd probably hop in it manually if I didn't get into it here, especially. And then look at it here at the 1 o'clock. And then considering how trend has been going, like that'd have been beautiful. Like if you wanted to get in that exactly when market was coming out, you could have been just like, okay, let me put this here. Like let me see what point this is coming in into. Right, hit that quite nicely if you're looking at that there, and then you're just trying to follow a trend to get into another trade. Could have wrote it down just like that. And then when you see it coming back up here, this would just help you validate a little bit more. Hit the optimal. Might as well. That was the 6.18 optimal rejection zone. Other point was the last point of defense. If you see it happening, if you are in a trade, you just add in another contract. Or if you don't want to be in the trade anymore, just take yourself out of that trade and you're not really risking too much money. And if you did do that, rewarded handsomely. Let's go to the next day. Yay. Okay, we are just about in this zone when London opened here. London opened at this point right here, right? So let's take a look. Come in right here. Nice, it hit the optimal. Let's see how much it takes if we would have added in another contract. Kind of high, yes, me kind of thick, kind of a lot, right? But we do kind of see our side coming oversold over here at 11:45 though. So if we do come back up in here, hit the 6.18 quite nicely, very nicely. Either way you did it, you could have saw a nice rejection because it was now recently coming into the zone. What more would you need? And you can clearly see that it's already overextending itself, and then RSI is coming oversold, and money flow is almost oversold, or rather is oversold. Now we came back in here at about, let's say, came here around 6, right? All right, so this is our nice third iteration of the field. And furthermore than that, that's all I would be doing. Other than that, that's what you need to do.